Hi guys, welcome back. So today we're going to be kicking off with the Q1FY24 results and the workshops regarding that, right? So as you know, like I think a lot of people are accustomed to seeing me right now talking about businesses and results. So we're going to be starting that series again, where we discuss the Q1FY24 results of various companies that I track, and what has been the update. Has the management able to follow what they told? We're going to be starting to do that. So today, we're going to be talking about a really interesting business model. It's called Yatharth Hospitals and Trauma Care, right? So we will talk about it. As usual, I start with the business model, and then we talk about how the result has been. The only additional thing this time is going to be about I will discuss the hospital metrics in detail. Some of you all might know, some of you all might not know. So I'll discuss what are these hospital metrics and how do you look into this. Then followed by the capex and of course the management outlook. What is the outlook like, right? So let us start. I'll just share the PPT. Yeah. Yeah, so today we're going to be discussing about Yatharth Hospital and Trauma Care. Yeah, so first thing is, let's understand the business model, right? So what does Yatharth do? Yatharth is a super specialty hospital. Now, what is the difference between super specialty hospital and general hospital? So general hospitals are those, which treats your lifestyle diseases or chronic diseases. Like, for example, very acute and ailment diseases such as diabetes, or maybe some basic diseases where you need to get a checkup or a consultation of those kinds. These are called as your general hospitals or your general medicines, which again, like I told you, which treat your chronic and lifestyle diseases. Then you have your super specialty hospitals. Super specialty hospitals are more into, that is pertaining to a certain field, like, very, very niche, such as neurosurgery, neuroscience, cardiology, pediatrics, these kind of things. These are called as super specialty hospitals, right? Now, it just to relate to, imagine general hospitals are like, the auto ancillary business that does a very commoditized product, right? That the margins are not high, right? Similarly, here also general hospitals or the general medicines, the margins are not high because you're doing a very small ticket size kind of consultations or treatments. And not only that, since everybody does that, right? There is no niche in this space. What happens is your margins are a bit lower, right? Now, compared to relatively to super specialty hospitals, super specialty hospitals are more like, a very niche auto ancillary company, just like RSC get it, very niche cares that they do. Because of that, these people do have a high operating margin, higher margins, all kind of, high, since they have a high ticket size, right? Like, of course, you imagine you're going to get treated for diabetes versus, let's say, somebody, God forbid, but getting treated for something like cancer, right? The amount that you spend is more. As a result, now you understand why the ticket sizes, because of the ticket size of the treatment, the margins are also a bit higher, right? Now, when you talk about hospitals in general, the hospital can be divided into four categories. One is primary, secondary, tertiary, and quaternary. Primary hospitals are those, that you go for a consultations or, just a general consultation. Let's say you have a fever or a cold or diabetes or something, very lifestyle and chronic diseases. Secondary are those where you do get general surgeries, or not just general surgeries also, but certain times there are consultations required, probably just to like gynecology or pediatrics, just niche, but also just a consultation kind. These are called as secondary hospitals. Tertiary, or not just that, but where you do a small kind of treatment or a small kind of surgery, there, that is your secondary hospital. Tertiary hospitals are those where you do get a very niche kind of treatments, like something related to urology, where you're undergoing some kidney treatment, some you're removing your kidney stones or any of those kind, or you're going to get a neurosurgery, maybe something related to your brain, like some brain trauma, or hemorrhage, or these kind of things. This is your tertiary hospitals. Quaternary is extreme complex cases and very rare cases that you come across, maybe something like organ transplant, some genetic conditions, extreme rare cases of cancer. This is called as quaternary services, quaternary hospitals. Now, you do understand that as you move from primary to secondary to tertiary to quaternary, since the complexity of the diseases and the complexity of the treatment, plus coupled with the fact that you need a very niche skill set to treat this, you understand, right? The treatment cost becomes higher, and as a result, the margin also becomes higher. That is the reason. That is the reason why hospitals are moving from general medicine to super specialty, because that is where the margins are, right? Similarly, here also, if you see, that is the story of Yatharth basically. So Yatharth earlier in the year 2021, they used to have majority chunk. Can you see 56% coming from the general medicine, right? And they had hardly any coming, like 40% coming from the super specialty. But right now, can you see the mix has completely changed? Now 30%, sorry, 30% is coming from your general medicine, whereas the other 70% is coming from your super specialty medicine, right? So what is happening here with Yatharth is, it is similar to, like, like you see in any kind of I do keep talking about consumption business. Let's try to relate to that as much as we can, right? So it becomes easy for you to understand. It is more like here what is happening, like, I'm pretty sure this is not I don't know if it's an appropriate example, but remember, like, with Varun Beverages, what happened? The stink came and the product mix changed, and as a result, what happened? Their margins improved. Similarly, here also the product mix is changing. They are moving from a general medicine to super specialty. And here, since they're high ticket items, since the product mix has changed here, margins are improving, right? This is the same story that is happening with Yatharth, right? Similarly, the same thing. Now, let us see the amount of the hospitals that they have. See, they have 4 hospitals, okay, compared to the likes of the big hospitals such as Apollo, and then, Max Healthcare, and what are the other hospitals? Fortis, for example. Compared to them, these are very either in pan India metro cities, or at least they have expanded. Whereas Yatharth is still a regional hospital. They're very, very concentrated in the region of Delhi and NCR, right? If you see all their hospitals here, can you see here? It is only in Delhi NCR region, Noida, Greater Noida, Noida Extension, right? Right now, they started the first hospital in this Greater Noida, okay, and it was operated in the year started in the year 2010, and that is how they started. After that, what happened? They added this Noida Extension, another hospital. Recently, they started moving out of this Delhi NCR region, and they moved towards the entire Uttar Pradesh. That's where they acquired this hospital, Jhansi Orchha. It's an inorganic expansion. They've acquired this hospital, right? And you can see they've been here. You can see, right, how they've done their expansion. The first hospital started in 2010, then 2013, 2019, and 2022 recently one, right? As you can see, this is the 4 hospitals that is there, right? I will come back to this, all this other metrics later, occupancy, ARPOB. I'll explain it individually, and then we'll talk about it. Then you can come and see the payer mix. Now, what is payer mix? Just let us understand first thing first. What does payer mean? Payer means somebody who is paying you. Who pays the hospitals? Patients pay the hospital. Now, when you talk about patients, there are different kinds of, patients are paying through different ways. The first is where self-payment. Self-payers are these people who have neither insurance, or they don't come under any government schemes or anything. But, people who pay through their own pockets. Let's say you go for a treatment, no insurance, you're just paying via cash, right? These are called as self-payers. That contributes to 36% of their revenue. The next thing is their insurance. That is people who get admitted, get treated, and they renew their insurance for their treatment. And from insurance, how much are they getting? 27%. Then from central, state, and local government bodies, can you see it? You're getting 37% of the thing. This is where, I don't know if you all are aware, but every time in a private hospital, they have to reserve certain amount of beds that are there for this government schemes, right? So that people who cannot afford, they can come and avail the treatment, and government pays in return to the hospitals, right? So that is where they get 37%. So ideally, they have to reserve 30 to 35% of their beds to this government scheme. Now, why am I stressing here so much is because, as you know, when you're paying via cash, if you're a self-payer, what happens is you have more flexibility to increase the price. If you have attended the recent Rainbow Children Medicare con call, there you saw the management telling that they were able to take a 5 to 6% price hike on any, generally on an average, on a consolidated basis, irrespective of the treatment. They were able to take a 5 to 6% price hike on people, on cash treatments. That is for people who are paying via cash. Versus, let's say, for insurance, they took a price hike of 2 to 3%. Here, it is not that flexible, right? I don't know if this, the same method follows here. But another thing where the huge difference comes here is in terms of payment. That is, let's say if you're paying via cash, right? What happens is you'll have to either pay before, if you're having a serious surgery, you'll probably have to pay like a 50%, 50% of the cash upfront. Or worst to worst case scenario, what? Of course, right? Before you get discharged, you'll obviously have to pay and only then get out. The hospital will not let you leave otherwise, right? So here, what happens? The hospital gets cash upfront, right? When you're paying via cash, if a customer or if a patient is paying via cash. If somebody is paying through insurance, what happens? It's a win-win situation. In one way, a win situation is because, see, if your hospital is there in every insurance how do I tell you, whether it's in Star, Bajaj Health Insurance, or XYZ Insurance, it is there, it is a good thing for you, right? You get more customers irrespective of the insurance. On the other hand, here what happens here is, with insurance, what happens is, once, let's say, a person renews their insurance, instead of paying via cash, the money that for the treatment gets credited, or the payment happens after 50 to 60 days, or max to minimum 40 days, max to max 60 days. So the cash cycle, what happens, becomes longer here. Similarly, in terms of central and state, also local government bodies also, even in this case also, what happens, let's say if somebody is admitted, through various schemes of the government, right, there will be certain seats reserved, and they get admitted in the scheme, and then after that, it's a free treatment for them, and the hospital gets it from the government. Even here also, the pay cycle is around this range, or it might be even more than that of the insurance also. Like, it depends, which hospital, which government, which state government, or so. So as a result, what happens here, the cash crunch comes between these two. So it is always better, if in a way, it is always better if a hospital has more self payers and more insurers, versus this. Because, as you know, insurance, like I told, it's a win-win situation. Because if see, let's say if you have insurance and you have a certain hospital, you would prefer that hospital any day. Like that, if a hospital is covered under your insurance policy, if that is a cashless hospital, you would any day prefer that hospital over, somewhere where your insurance cannot be renewed, right? So that is why it is better for any hospital to have self payers and insurance more, like a majority chunk coming from there, versus, let's say, the central and state government. So over and all in all, to just give you the entire crux of the business model, basically, Yatharth is a super specialty hospital, and their product mix has been changing. Like here, can you see here, they're moving more from general medicines to specialty medicines. They do have various kinds of specialties, ranging from cardiology, etc. Even here, interesting thing is, their nephrology and urology segment grew by 53% on a year-on-year basis. Cardiology grew by 35%, and the organ transplant, although it is has grown, right? Recently they started it, and oncology has grown by three times. Although it is a very small base, I know it has grown by 3x a year, right? So you can see a good amount of product mix happening. They are a regional hospital compared to the other hospitals, which means what, they're concentrated in that Delhi NCR region, and right now they are in the expansion mode, right? And the last thing is, of course, you can see is the pair mix. What is the pair mix? Why did I concentrate here is because, if you see the likes of Fortis, right? Fortis has only 10% coming from the central and state, and they have majority chunk coming from self-payers and insurance. I think self-payers is around 40, and insurance is also around another 38 to 40%. And the central and state local government bodies is hardly 10%, right? Even in terms of, I think Apollo also, it is a similar case, or even Max also, they have very less coming from the central, state, and government, and self-payers and insurance are both are higher. Like I told you, if you have higher here, your ticket size is even higher, right? So yeah, next let's see, that's enough about the business model. We'll come here and we'll talk about the result. Now, when I talk about result, how the hospital has done, just in, if you have to just take your income statement and see, only by those general metrics, how the company has done. If you see here, can you see there are four metrics I see? You can see that the top line has grown both on a year-on-year and quarter-on-quarter, right? Here in hospital segment, what happens is Q1 is a bit of a lean quarter for them, not their best quarter, right? Because one of the reasons that Q1 is not the best quarter is because, since it is a holiday season, people tend to go out. Not a lot of people do get sick or get admitted. As a result, Q1 is a bit weaker compared to Q4. But in spite of Q1 being weaker, can you see they have clocked up a really good revenue, right? 7.6% quarter on quarter versus 40% year on year. Not only that, the PAT also has grown by a huge chunk. Can you see that the PAT, there's an operating leverage here, right? That is there. PAT margin is also there. PAT margin has improved on a year-on-year basis. So has EBITDA margin. So when you look at a result document at a glance, it has done really well. Now, since it is a hospital sector that we're seeing, there are certain hospital metrics also that you have to see, right? Like I always keep telling, in terms of FMCG business, if you're doing, you have to check for volume and value growth, right? Like I need my top line to be driven more by volume growth than value growth, right? So similarly here also, let us just see the hospital key parameters that are there. Now I will try to explain everything in detail. How do you look at these different parameters and how do you drive the meaning out of it, right? So There are three important parameters, first of all, in terms of hospital KPIs. One is your occupancy, one is your average revenue per occupied bed, which is this ARPOB, and the other one is ALOS, which is your average length of stay. Now, what does occupancy mean? As you know, there will be, let's say, for example, there are 100 beds in a hospital. Now, not necessarily right that all the 100 beds will be occupied every day or every time, right? Sometimes only 60 beds are occupied, sometimes only 80 beds are occupied. So, the number of beds that are occupied, which means what? Occupied means basically the patients are getting treated, right, with using that bed. So the number of beds that are occupied out of your total beds. If 100 beds are there and if 80 is your occupied bed, then your occupancy ratio is 80%, which means what? Right? The 80 beds are being used constantly for treatment. Now, this is what is occupancy. One thing to note here is it is very difficult for any hospital to reach 100% occupancy. Now, take a moment of pause and maybe you can just think for yourself, or the reason why it is very difficult for any hospital to reach 100% occupancy. See, let's say hospital has 100 beds, for example, and 20 beds are reserved for ICU. Now, not necessarily, right? All the, let's say 100 patients are coming and that 20 will be for ICU. Maybe all the 100 patients are coming, they're coming only for general treatment. So that 20 beds that are there for ICU are left unattended. They can't be used. So as a result, even if demand is there, what is happening? The 20 beds are not getting used, right? Because why? There are for certain treatments there are certain reserved beds. For example, another example that you can give is, let's say a hospital has a gynecology department and in that 10 beds are reserved. Now let's say there is no woman coming and getting admitted there is no kind of gynecology treatment that is getting availed, right? So although there is demand, since that bed is specifically reserved for the gynecology treatment, what happens is, you can't use that bed, hence occupancy ratio will always be will never be 100%, right? So occupancy ratio at the end of the day is nothing but the number of beds that are being currently utilized out of your total beds. Now think about it. Occupancy is more like volume growth for you in hospital, right? Like remember in consumption that I keep talking about, volume growth is needed, value growth is needed. Volume growth is what? The number of units that you keep selling, right? It should increase on a year-on-year basis, and value growth comes by increasing your price. Here in hospital, occupancy is like volume growth. How? Because occupancy, which means what? More number of people are coming, more number of patients are coming, more number of people are getting treated, right? So you need this occupancy to go up. It is your volume metric in hospital. Okay. The next thing is, as you can see here, wait, I'll come back to that later. The next thing is your average revenue per occupied bed. Now, what is average revenue per occupied bed? As you know, there are different kinds of there are different kinds of treatment that are there. Some can be, very, some cannot cost so much. Maybe for some can be like, cancer or something that can cost a very high treatment, right? Like very pricey. So as a result, every bed, whatever the occupied bed is there, it can have different kind of revenues. But what is the average revenue that is there? You're taking the average of all these revenues. This is called as average revenue per occupied bed, right? Now, not just this, this is more like a value play in hospital. You need your average revenue per occupied bed to be increasing, right? It is more like, how do I tell? Remember, I keep talking about in value growth, like I told you, in footwear segment that I keep talking about. Now, if a company has different SKUs of footwear, right, at the end of the day, it can range from 500 rupees to 4,000 rupees. Like, for example, Metro Brands, it has shoes ranging from 2,000 rupees to 4,000 rupees to 8,000 rupees. But their average selling price is what you look, right? And we always keep talking about average selling price, that is the value growth that you take. It should increase 4%, 5%. Similarly, here also, same funda, different treatments have different ticket size items, and you need the average revenue, that is per occupied bed, to be increasing, right? Same thing. Average revenue per occupied bed here is like a value growth, right? Same thing. So you need your occupancy to increasing, which is your volume growth, and you need your average revenue per occupied bed to be also increasing, which is like a value growth. The next thing you need is your average length of stay, which is nothing but ALOS. ALOS is nothing but okay, how do I put this in easy peasy terms? So average length of stay is, let's say, how long a patient is staying in the hospital, right? Like you try to get an average length. I think it is calculated, by taking the number of patients that are there, dividing the total number of stays of the patient divided by the how do I tell you? Divided by I think the total number of patients getting admitted. I think that's a formula somehow. But average length of stay is more like an efficiency parameter for the hospital, right? And what do you mean by efficiency parameter? Here, average length of stay should be decreasing every on a year-on-year basis. Now, why is that the reason? Because see, the more number of the patients, the more sooner the patient gets, sorry, not more sooner, so yeah, sooner the patient gets discharged, right, a bed will get available, the bed will be available, which means what, I can treat again another patient. As a result, more footfall will increase in my hospital and more volume growth will increase. That is the reason the average length of stay has to keep coming down, so that my volume growth also keeps going up, right? This is the reason. Now you can tell me, like, Prerna, isn't it better that an average length of stay, like it should increase, because longer the patient stays in the hospital, more revenue will be generated for the hospital. Now see here, what happens is, let's say if a patient is staying in a hospital for a very long time, one is, of course, the other people contracting that diseases or infection becomes increases, right? So it's a bad rep for the hospital. Not just that, think about this. Let's say if you get to know that the patient has been there in that hospital, a patient is going there and staying in that hospital for 20 days, 30 days, or 15 days also for that matter. What happens, that which means what, that hospital is inefficient. They're not able to treat, they're not able to give a good treatment to that patient. As a result, that is why they become inefficient. And then what happens, you also won't visit that hospital, right? As a result, you need this ALOS to keep coming down here, right? So the people can keep getting they recover soon. And also, they recover soon, the bed becomes free, and like I told you, new people can come and get treated, and which drives the volume growth up. Another reason also, like I told you, is it's directly linked to occupancy also. Remember, I told you not all beds can be used, right? So as a result, let's say one patient only I'm treating for a very long period of time, and also there is an issue in occupancy. Like I told you, certain beds can be treated for certain diseases only. Then what happens? ALOS also will increase, and on the other hand, I can't treat other new patient also. Not just this, when a patient is staying for a very long period of time, what happens is my hospital resources cannot be used effectively also. That is why we tell ALOS is more of an it measures the efficiency of the hospital. And ALOS has to keep coming down, right, as a result, so that patient will get discharged sooner, and I can treat new patients, and volume keeps increasing. So here also ALOS also has reduced here. The last thing is your outpatient volume and inpatient volume. Now outpatient volume is what? Outpatient volumes are those we know that come for general consultation, or in definition terms, if I have to put of any person who's not getting treated, who's not getting any kind of surgeries that requires him to get admitted in a hospital, right? If you're getting admitted in a hospital and you're staying in a hospital for more than 24 hours, because if you stay for more than 24 hours, they charge you for the bed, right? Per bed, they charge you for a day. Per day they charge you, that bed charge they put you. So if you're getting a general consultation, or a very minor treatment where you're not staying for more than 24 hours, and where you're not getting charged for the bed, that is called as outpatient volume. Inpatient volumes are those, where you're getting charged for the bed, where you're coming in for surgeries, you're staying, or at least you're staying for more than 24 hours and getting charged for bed. Then that becomes an inpatient volume. Now think about this, right? Inpatient volume, we need, as a hospital, if you're there, you need your inpatient volume to increase more than your outpatient volume. Why? Because see, again, the same funda, the same logic comes to head. If you are going and going to a hospital, let's say you're going for just a consultation of diabetes, right? Just a normal consultation to check. What happens? How much are you spending? Hardly you're going to be spending 500, great hospitals 2,000 for a consultation. But let's say you're going to get a surgery for something very serious. You will have to, the bed charges these days are 10,000. Where are you spending more? You're spending more while getting admitted versus just a consultation. As a hospital, I will need to make more money. So I would, of course, want more people to get admitted here than more people coming for consultation. Why? Because here my margin is higher with my inpatient volume. That is why you need in a hospital inpatient volume to be more compared to your outpatient volume. So to sum it all off, I hope this is the hospital key parameters that are there you understood. One is occupancy. How occupancy is related to volume growth. We need the occupancy to be increasing. Occupancy is like the number of beds that are occupied, and you need more number of people coming in, and more number of people coming in, more number of footfall, and this is more or less of your volume growth. Then you have your average revenue per occupied bed. Average revenue per occupied bed is more like your value growth, right? This has to keep also increasing. ALOS has to keep decreasing. Why? Because it is an efficiency parameter. If you have more longer stay, which means what? You're not being able to treat the diseases effectively of your patients. As a result, And not only that, because of this, your hospital resources are not getting used. So you need the ALOS to keep coming down. The next thing is your outpatient volume. Outpatient volume doesn't have higher margins as compared to your inpatient volume. So that is why you need your inpatient volume to be greater. You need a major chunk of your revenue coming from inpatient volume as compared to your outpatient volume. Okay. So now let us compare this hospital KPIs. Keep in mind, and we will see how Yatharth has done. If you see here, can you see this? This is the occupancy in terms of per hospital, that is different hospital, plus on, and this blue color chart that you can see is on a consolidated basis. Now why have they given for a separate hospital is in terms of occupancy. When you talk about, I forgot to mention this point. Okay, so let's say a new hospital is opened, right? Giving you a general example, let's say a new hospital is open in your area, right? Would you go visit that hospital? Let's say you have a surgery that has to come up with. Would you visit that hospital that is nearby, or would you visit a hospital that is, like, let's say, even if it is 10 kilometers far away, but you've been going there, you know the doctor really well, would you visit there? Generally, what happens is you tend to visit the hospital that is 10 kilometers far away. Why? Because there is a factor of trust. Similarly, here also, when a hospital gets newly opened, it is very hard for that hospital to reach even 50% occupancy in the first year. It generally takes 3 years for any new hospital to reach 50% occupancy, which means what? In that hospital, if there are 100 beds, it takes them around 3 years to utilize even 50 beds completely in a year, right? Why is that so? Because of course you're treating something like a health, you're treating something related to your health. It is not something casually like going out for shopping and getting something, right? Because everybody is very conscious here. So here what happens, I think it's even something that you can relate to in your day-to-day life also. If you have to even go for a consultation, you'll call your friend up or your family up, you'll ask, like, hey, have you gotten this treatment? How is this doctor? Or you'll go to Google reviews or Practos, right? As a result, it becomes very hard, right, for a new hospital to reach that occupancy in day one itself. Usually it takes around 4 years to 5 years for max to max. It takes 6 to 8 years also at times for a hospital to reach that complete 90% occupancy, 80% occupancy, right? So can you see here, that is why the occupancy here at Jhansi Orcha, can you see, it is hardly at 17% this time, because it is a new hospital started in 2022 by these people. That is why it is at this. But can you see the older hospitals that are there, whether it is Greater Noida, and the Noida extension, the occupancy levels are around 66, 92, 37. You can also ask me here, Preta, the Greater Noida hospital was started in 2010, whereas this Noida one was started in 2013. Why does this have more occupancy compared to Greater Noida, right? The reason is because although Greater Noida was started in 2010, in 2018, I think in 2018 or 2016, I'm not sure about the year, but they added extra 400 beds and they expanded the capacity here in Greater Noida. As a result, why? That is why you can see the occupancy is not high compared to this Noida one. That is the reason. Again, the same logic that I told you. It is very hard in the first year for you to reach your occupancy, right? So, but on a consolidated level, can you see here? Consolidated level means, come all the four hospitals all together. On a consolidated level, what did I tell you? Occupancy should go up on a year-on-year basis. Can you see here? 40% and versus 51%. You're seeing an incremental percentage change of 10%. Not just that, even on a quarter-on-quarter also, you can see the occupancy going up. So the first parameter, that was their occupancy, that was their tick mark, done well, right? 40 to 51%. Next, we have average revenue per occupied bed. What was average revenue per occupied bed? It was like value growth. Can you see here the value growth? Again, tick mark. Can you see? Last year it was 26,457. This year it is 28,140. So this is an incremental change on a year-on-year basis. How much? 6.6 to 6.5%, right? So again, can you again tick mark? Like I told you, occupancy is going up, ARPOB is going up. Next, you have your average length of stay. Can you see average length of stay also has, it has become slightly increased, but on a year-on-year basis, it has decreased. Here, it has gone up from 4 to 4.6. Now, here's the thing. When you talk about average length of stay, the ideal is like for this, at least for Yatharth, is between 4 days to 5 days. Now, one of the reason for average length of days to be here is, see, let's say if you're someone who's giving, if you're going to Rainbow Children Hospital and if you're giving birth, right, and let's say you're just going through a normal delivery, what happens? You can just discharged within 2 days. So average length of stay become 2 days. But let's say you're someone who's getting an organ transplant. Let's say you're getting a kidney transplant, right? What happens then? Of course, you will need to stay for a week, right? As a result, what happens? Your average length of stay goes up. So more the super specialty, more you're into the super specialty region, or more into that, your average length of stay will be in the range between 4 to 6. But here, in the con call, that they have mentioned that their ideal spot is between 4 to 5 days, and as you can see, they've remained in that range, right? So here also tick mark, there is no problem with average length of stay too. Now, little bit, let us just do the, so even in terms of hospital metrics that you can see, they have done well, right? Occupancy has gone up, average revenue per occupied bed has gone up, and ALS also it has remained stable. Now, let us do a peer-to-peer analysis. In one way, I'll tell you, the peer-to-peer analysis is also not fair, because when you compare it to the likes of Fortis, Apollo, and Max, all these are they are there. They're like, for example, Apollo has a pan India presence. Fortis is there in probably every Kota metro city that you can see, right? It's not right. And similarly, Max is more into Delhi, NCR, and Mumbai region. It is already there. So it is not exactly apt, because it will be like comparing Britannia and Vector. Britannia has already expanded, right? All everywhere they put up their distribution, even in T2 and T3. Whereas Vector right now is just starting with the expansion, and then they just, I think, finished 2.5 lakh distributions. Similarly, here also, Yatharth is right now in the expansion mode. They're acquiring new lands and everything. So it is not right, but also let us just see. Let us just do a peer-to-peer analysis and see. If you check for Fortis has an occupancy rate of 64%, whereas this one has Yatharth has 51, Apollo has 62, and Max has 74%. In one way, you can't, like I told you, you can't compare the occupancy, because not just these people have more hospitals and more number of beds. The other reason is the hospital here is fairly new, right? Whether it is this Noida extension and Jhansi Ka, these two hospitals that are there, it is fairly new. Whereas if you see Fortis Ka Hospital, Apollo Ka Hospital, and even Max, at least these hospitals have been running for 8 years, 10 years. Some have been running even for 20 years, right? So they are very matured hospitals, versus these hospitals are fairly new. So although the occupancy, it might seem very low here, but please understand, this is a new hospital, that is the old hospital. And like I told you in the opening also, while I was explaining about occupancy, it takes around 3 to 4 years only to reach 50% occupancy, right? So that's in terms of occupancy. Second, in terms of average revenue per occupied bed, if you see the average revenue per occupied bed, here it is 28,140. And I think in the Noida one, I think, I don't know which Noida, I think, yeah, yeah, the Noida extension one, they have the highest average revenue per occupied bed. The value growth is around 30,000, but on an average, it is around 28,140. Here also, if you see average revenue per occupied bed, Fortis has 60,000, Apollo has 57,000, like 57,000 is their average revenue, and Max Healthcare has 75,000. Now, one of the reasons why these people's average revenue per occupied bed is slightly lower compared to the likes of Fortis, Apollo, and Maxis. One reason is their oncology treatment that is there, right, which is kind of like a premium treatment, like cancer treatment that is there, is 15 to 20,000 less compared to the likes of Max Healthcare, right? One of the reason, right? The other reason why their average revenue per occupied bed is also less is because when you talk about Fortis, like Fortis has only 10% of the revenue that is coming from this government payer mix. Remember this payer mix that I told you, it has only 10% coming from here. Self-payer is around 40%, and insurance also so. So remember, I told you here you can take that price hike easily, right? So that is the reason, one of the reasons. And the other reason for average revenue per occupied bed going up also is the international patient. Right now, as you know, right, people from abroad are coming, especially from Middle Eastern countries. They come from there to India to get treated. Why? Because India is relatively cheaper for them. They get their currency ka advantage, and it becomes cheaper for them, right? But having said that, for international patients, it is a they're a bit of high ticket customers. You get to charge them a bit different, right? So here, Yatharth has just now ventured into the whole international patients, because see, if you have to treat international patients and all, you have to get this certain legality things are involved with the government. They have just ventured into it. They've just started right now. Whereas with Fortis, I think Fortis has around Yeah, I think Fortis is around 10%, 10% coming from international patients, whereas Max has 5% coming from international patient. That is why even their average revenue per occupied bed is higher. One of the reason their average revenue per occupied bed is higher is because of the less amount of payer mix coming from the government. The second reason is they're already into the international, they're catering to the international patients, right? Like people are coming and, that is the reason. Whereas average revenue here is less because of that. In terms of this international patient thing, I understand, it is a very high ticket item, high customer segment they get. Yatharth has just ventured into it. In fact, recently, can you see this? One second, let me show you. Can you see this organ transplant was 0%? This year it has been 1%, right? So in this, out of this, 95% of the patients that were there were international patients. For kidney transplant that they did was international patient. And they're also getting a reputation for being really good in this whole super specialty segment. As a result, people are, coming and visiting their hospital. It will take time, of course, because they just started it last year. So of course, it will take time. And once this becomes a good chunk of their revenue, right? Of course, you can see this average revenue per occupied bed also increasing. Yeah. Next is revenue mix. Like I told you, you need your inpatient revenue to be more than outpatient revenue. As you can see, even this has increased, right? And inpatient volume and outpatient volume also you can see here, right? So that's it. In terms of hospital metrics also, if you have to compare, they have hit a sixer in all metrics, right? Now let us see the capex, right? Because see, at the end of the day, if you need to grow, right? Like, see, you have the current hospitals that are great, but my future growth will come, like I told you, I need to add more beds. Because if I'm adding more beds, it just tells you that there is more demand for my hospital. People want to get treated here, people trust my hospital, right? So if a hospital is adding more number of beds, it is just an indication that the demand for this hospital is great. But here, how are they going to do it? So as you know, Yatharth is a recently fairly new company, right? And they did the whatever the IPO proceed they got, 500 crore. Out of that, 132 crore they want to invest in capex, and the other 250 to 260 crore they want to do it they want to repay the debt what is there. Even the debt repayment actually is not that it's not like they were heavily debt ridden, because you know how the hospital sector is. You do require imagine, right? You have to set up such a building. You have to set up a posh building. You have to pay your doctors, you have to pay your nurses from day one, irrespective of you have your patients or not. You have to get those machines that are so expensive, right? So as a result, it is very capex intense industry, right? You have to put up capital upfront first. So here, again, in terms also, they didn't have a lot of debt actually, if you go back and see. But because their ROE is pretty good, that just shows you they didn't have a lot of debt. But having said that, this 250 to 260 crore that is there, they just want to get rid of all their debt and and do it. So the 132 crore investment where they're doing, one is of course they bought a land near their existing hospital, this Greater Noida hospital that they started in 2010, and they want to add the beds there. Currently they have in this Greater Noida hospital, yeah, this Greater Noida hospital that is there is 400 beds as of now. Can you see it? Bed capacity is 400. They want to take it up to 600. Similarly, here with the Noida extension also, they want to go from 450. They want to add another 200 beds and take it up to 650, right? So they're expanding beds in both. Not only that, in this Jhansi Ka hospital, that is new hospital that is there, they want to start doing the oncology treatment, because again, high ticket items, right? So this is what they're trying to do. And this just shows you, right, that the demand for their product is not the demand for their product, but yeah, the demand is that the people are trusting the hospital, and that is why they're moving and investing heavily in capex. Yeah, that's that about the capex. The next thing is, the last slide is of course the guidance. Like, of course, here the management is, right now they're at 51% occupancy. By FY24 they want to reach a 60% occupancy, right? Again, they want to have a percentage increase of 10%. And of course, in terms of guidance, the company has not given anything. They are the kind of company who would probably over deliver, under promise and over deliver. But just to give you a crux, although they haven't given any guidance, right? Just to give you a crux. First of all, see, there are certain metrics that I look for in any companies, right? First thing is, of course, you can see that there is an entire shift of, like I explained while starting making this video, is the entire product mix is changing, right? Like, see, the growth is coming from where? The growth is coming from, one, the fact that they're moving from a general medicine hospital to a super specialty. So product mix is changing, a sort of I wouldn't call it premiumization, but yes, our product mix is changing. As a result, they're moving into high ticket items, which is improving their margins, which is of course giving them a boost in terms of revenue, right? That is one thing is happening. The second thing you can see here, although they're a very small hospital, although they are very regional hospital, right? They're moving into expansion phase, right? They've just acquired this Chansika hospital. And oh, I forgot to mention this in CAPEX also. They are trying to build another hospital in this in near to Jewar airport, right? Because since that hospital will be near to airport, it becomes easier for international patients to acquire it. So not only that, they're moving into super specialty. They're targeting high ticket size, high customers also. Again, more margin. Not just that, if you see in terms of all metrics, like I told you, although they're regional hospital, very small hospital, started fairly new, right? Like even if you see their hospital, that Jhansi hospital, which was acquired in the year 2022, in just a year, it has 70% occupancy. So in terms of all the metrics, whether it is occupancy, whether it is average revenue per occupied bed, ALOS, everything they're doing well. There is not one negative thing that is there that is happening, right? And the last thing is, of course, you can't just depend on the existing hospitals. I would want my company to deploy whatever money they have to grow further. And you can see that is what they're doing. They're going into this whole expansion mode by adding more beds in their existing hospital, expanding their hospital, and looking also for an inorganic acquisition. This just overall tells you, that the company must be doing something good at the end of the day, because you can see that the growth is coming from premium, from the product mix, from expansion, from the capex that is happening, and also by improving the current mix that is there, right? So this is the overall, how do I tell you, the overall crux. Let me just stop this. Yeah. So this is literally the overall crux of Yatharth Hospital. It's quite interesting. Again, I would like to see, how, of course, as an investor, it's just our thing. It's our duty at the end of the day to track and see, how the company does, the next, how the company does, and, stay with the businesses that perform, and, keep tracking, and yeah, keep tracking, and keep, and just track the businesses and see how it goes. Yeah. So that's that about Yatharth. I hope to see you tomorrow with another business model or giving you another update on another result. Yeah. So until then, take care. See ya. Bye.